Good morning, everyone. How are you doing today? Michael Zuber, author of One Rental at a Time. And just so you know, Saturdays are special days here at the One Rental at a Time channel. Not only do we do our 7:30 daily financial news, which you are watching right now, thank you very much, but we also do a live Q&A just for our YouTube subscribers. That will start in about 29 minutes. I will do it from my computer, which is right over here. And what we will do is I will take questions from you. I like doing live Q&As on Saturday because it allows me to get to the crux of your questions. Sometimes in your comments, I respond and I just don't understand, right? I don't understand the nuance of your question. And, I try, don't get me wrong, but I know sometimes I am just wrong. So on Saturdays, I spend an hour and we just go through your questions. If we get done early because there's no question, so be it. But I will give you a full hour of my time starting in about 28 minutes. So if you want to attend that, you want to ask me questions, go ahead. I have collected a whole list of questions from the week, so I will have a few to start with, but I hope to see you there. Next up, I got a question that we're going to find out. So I'm wondering what's going to happen first. Do you think we're going to get 20,000 subscribers on this YouTube channel first, which we need about 950? Or do you think we get to 10,000 Instagram followers for the One Rental at a Time channel? It's going to be an interesting race to see if we get to 20,000 on YouTube or 10,000 on Instagram first. If you want to be a part of the first 10 or 20, go ahead and hit subscribe or follow or whatever you want. If you do hit notifications, just realize I create 5 videos a day on average, so you might get annoyed with me. But again, daily financial news, 6 multimillionaires, projects, lots of stuff going on. So all the content is original. It is all here to help you. So a lot of stuff going on today. We're going to talk about kind of 3 or 4 things that caught my attention, but we are really going to talk about a Bloomberg article that a friend of mine, Aaron Norris, from Property Radar, helped contribute to. We're gonna talk about how iBuyers are feeding Wall Street and not giving us, the public, a chance to play. Again, Aaron Norris, thanks for the article. Great work, my friend. Thank you for sending it to me. I'm hoping to get Aaron Norris interviewed on the channel because I think this is a topic we should be talking about. Again, I will close with that segment. First and foremost, it looks like, as I've said, was happening, wage inflation is occurring at the fastest pace. It's actually at the fastest pace since the early 90s, or almost 30 years ago. We are seeing wages go up across the board, entry-level jobs, jobs above that. There's a couple of things that I want you to know about wage inflation. First off, a lot of these kind of transitory economists are telling you, hey, it's a supply chain issue. It will reset. Look at lumber. Lumber's down 20% from the peak, although I would still say it's elevated. So don't, whatever. But wages typically are inelastic, meaning it's sticky, right? They don't, if they go up, they don't come down, right? You don't walk into the office one day and your boss tells you, hey, I just cut your wages $1 an hour. You're not very happy about that. Right now, again, as I've said, if you are working in an entry-level position, you have more power than you have ever had. You can very likely go out the door to some other service sector and get essentially the same job for more money. You have more power than you've ever had. The other thing is wage inflation may not, impact bottom line in the short term. It's either going to impact the top line, meaning prices go up, or the bottom line. You just can't make this stuff up, right? The money's got to come from somewhere. So it will either come from you and I as consumers, or it will come from the company's bottom line because they will shrink what is called gross margin. It's going to happen somewhere, right? It may, in the short term, it'll be companies, absorbing it, but I don't think long term it stays there. I think companies will push prices higher, which mean you and I will pay more for hamburgers and pizzas and all that stuff. Next up, I don't know if you saw this, but one of our followers here, so thank you very much. They found an article about some renters in Germany. Looks like some renters in Berlin, Germany specifically, are trying to force the city via a referendum to essentially buy apartment buildings from owners, right? Force landlords to sell, and then lower rent and let the government run the apartments. Um, all I got to tell you is that's not going to end well. That will feel good in the moment if it happens. It's not passed yet, so but it's one of those things that people haven't looked to history. Countries or governments have tried to run apartments, and let's just say you don't have to go back very far in the history to see how terrible and badly and quickly that turns into a horrible situation. It is good for no one. Value destruction, service, and oh, it's just bad, bad. I mean, just go do a Google search, people, and see what happens. So, again, it's not on the ballot yet, but just realize that some people are looking to make some short-sighted decisions. On the inflation front, we've already talked about wages. We've talked about commodities like lumber, copper, and all of that before. But realize another element of inflation is shipping. Goods have to move around the country. They have to move around the world. And one of the ways they do that most frequently is what is called shipping containers, right? Those big rectangles we see all the time. Did you know that those shipping containers used to cost $3,500 per container? They're now 10 grand. $10,000. That has to come from somewhere, and most of the time it will come in the price of goods being shipped in those containers. So again, lots of stuff going on now. But now let's talk about these iBuyers feeding mega landlords and not giving the public access to deals. This article is in Bloomberg. I was sent the link, but I can't add it below because I don't know. You got to pay for the Bloomberg site, but yeah, it's what I expected to happen, right? These technology companies, they use this magic of AI and get smarter and smarter. And what do they want to do? They want to buy and sell like that. And oh, by the way, Wall Street, just for one example, Cerberus Capital Management, they just borrowed $2.5 billion at 1.99%. What do you think they're going to do with $2.5 billion? They are going to go pay cash for as many homes as they can. Cerberus already owns 24,000 single-family homes across the country. In the last quarter, so the last quarter, you and I have been tough finding deals. Cerberus bought 200 homes in Q1 for cash. Just so you can get the math, they bought 138 of them from Opendoor. They bought 52 from Zillow. They bought 28 from OfferPad. This data, again, comes from the wonderful Aaron Norris from Property Radar, who helped source the data for this Bloomberg article. And again, what Cerberus has done is they've just created a pipeline from all of these iBuyers. They've given them the criteria and said, every home that you have that meets this criteria, we will buy. So those 200 homes never went on the MLS. You and I never saw them. They were bought and sold theoretically in seconds. They still have to go through a process, entitling and all of that, but you and I never had a chance to buy them. Again, with record low inventory and iBuyers are actually sourcing listings, right? They have a site. Your mom, your dad, your grandpa, they go to Zillow and they want to see how much their house is worth. Like, ooh, I want to sell. They go, somebody pops up from Zillow or all these places and says, I'll buy it for this number. Quick, clean, no big deal. They're buying deals again that you and I never see, and then they just shove it out the other side to Wall Street. Invitation Homes, this is the biggest, baddest single family landlord in the country. They bought 700 homes in Q1. About 5% of them were from iBuyers. Why do iBuyers do this, right? In theory, in this low inventory environment, the iBuyers could, in theory, list them on the MLS and get more money. But sometimes a quick nickel is better than a long dime. iBuyers have tried to sell to the public and they don't like the inspections. They don't like this. It's time consuming. The loan process is too hard. They don't want to hold this inventory and have time risk of break-ins and all of those things. So it makes total sense that the iBuyers are selling as fast as possible, and they might as well sell to Wall Street, who just got crazy amount of money for homes. Again, what this means for you and I is you and I simply can't compete with Wall Street, but we can compete around them, right? We need to figure out what they're buying and then buy the things that don't quite fit the criteria. So that is somewhere to look. What I have seen from Wall Street, at least in my market, yours may be different. They don't like small homes. They don't like really old homes. So go pick off stuff around them. Again, Wall Street has more money than you and I. They have seemingly endless piles. Wall Street is coming. What this means is inventory is going to stay down. Prices are going to go up. Rents are going to go up. No chance this stuff has a crash. There's no crash coming. I've told you a year ago when all these YouTubers were saying a crash is coming. I told you it wasn't mathematically possible. It's still not possible. It could slow down. I do not see 19.1% appreciation next year. That is frankly a stupid number. But we could see 9%. We could see 6%. We could go from 100 miles an hour to 40 miles an hour. That's not a crash, people. Man, I really hate the fact that so many people were on YouTube telling you a crash was coming and you took no action. You lost out on almost 20% appreciation. You lost out on rent appreciation, which in many markets is 10 to 20%. It's not coming, folks. Get it. If you don't have any cheap 30-year debt, which I call cheap debt under 4% because I can't get it, go get those loans. Go get your 4 rental properties. You get 4 rental properties with cheap 30-year money under 30%, that cash flow today, you are going to be really, really good position in the decades to come. So that's what I got for you today. Don't forget, live Q&A in now 16 minutes. I hope you join me. Have a wonderful day. Today's a great day to make some money. Let's be better than yesterday. Bye-bye.